All right, guys, thanks for that. And we've got Alan Adler joining us, our Detroit Bureau Chief, to talk about earnings coming out from engine maker Cummins. And Alan, we touched a little bit on truck maker earnings earlier this week. Today, we're focusing in specifically on Cummins. What are some of their numbers saying? And we've got some interesting news about their natural gas engine as well.
Yeah, let's start with earnings. It was interesting. They actually mounted up a whole bunch of cash in the quarter, about $1.5 billion, and operating cash, which was a real positive. They beat their year ago numbers both on the top line with revenue and on the bottom line with profits. But there's a warning in there for a slowdown. We're hearing that a lot of places. The Maersk news this morning, and Cummins on their call yesterday said that they will be doing targeted buyouts and early retirements in the fourth quarter. If they don't get enough of those on a voluntary basis, then, don't be surprised to see some headcount reductions. This is, again, part of the cyclicality of the engine business, which, of course, follows trucking. So, it's starting to get to some of those points. They're still struggling a little bit in China with getting back the numbers that they had sort of in the recovery from the pandemic. Things aren't going great there. They're okay. But overall, Cummins continues to click along. And I think the interesting thing is that, and they're doing as good a job as they can, I think, of telling the story of the transition to electrification. They have a program called Destination Zero, which aims at, them making nothing with a carbon content by 2050 in terms of engines and power and so forth. They're pouring a lot of money into Accelera, which is the rebranded New Power division. And one of the things they're doing on the interim basis is natural gas. They've been doing natural gas engines for a long time, and really any OEM that offers them typically gets them from Cummins. Volvo would be one exception. They do their own with Westport. But the idea here is that in a story that we read earlier this week about natural gas and a 15-liter engine that's coming from Cummins, their head of on-highway business said he could see natural gas going to 10% of the engine market in coming years. It ticks around 2% most of the time, so that's a five-fold increase, and that's pretty amazing.
And Alan, we're talking about current results. What was expectations for the fourth quarter and end of year guidance?
They raised their end of the year guidance. They narrowed it a little bit on the profit side, but EBIT, I think they came up a little bit. I didn't have those numbers right in front of me, guys, but they're all in the story from yesterday. I think generally, they expect a good year on the EBIT. I have to remember that a lot of their, actually 5% of their sales gains in the third quarter were due to Meritor, which they paid $3.7 billion for a year ago. Actually in August a year ago. And so they're now getting the benefit from that. They also acquired some divisions of Siemens, which has added, to the revenue side as well. So some of this is what would you call that, Anthony, non-organic growth? This would be growth that comes through acquisition. So they're getting some benefits there. They are doing a pretty good job of bringing EBITDA up for the Meritor side and, getting more efficiency out of that operation. They're applying it across divisions like components and Accelera. The Meritor e-axle is sort of the crown jewel of that acquisition for them so that they could do an entire electrified platform for electric vehicles.
So, Alan, going back to those comments on the growth of natural gas, we know that we are talking about more of a transition to EVs as kind of this new look at things instead of a direct switch from diesel engines to electrification. You're looking at more of kind of these drop-in solutions and these step-by-step kind of piece-by-piece solutions instead of one massive switch. Is that something that Cummins is really banking on, especially now that we see maybe a little more scrutiny even coming out of the consumer about the validity of electric vehicles right now?
Yeah, I think you got a lot right there. Let me take it a little piece at a time. This is natural gas is ultimately transitional. Okay, it's not going to be around forever. However, with the renewable natural gas, which doesn't come from petroleum feedstocks, you take care of the carbon issue straight up. But as long as you're burning anything, in an engine chamber, you are creating nitrates of oxide. NOx pollution, basically, which is forms smog. And since you'll never get to zero, you'll never satisfy California and the states that follow them and want zero emissions. You're never going to entirely meet that. So this will be transitional for a while, but this engine agnostic fuel, the fuel agnostic approach that Cummins is taking with the revamp of its X15 engine, you'll be able to have versions that run on natural gas, on hydrogen, maybe on some other fuels. I haven't really discussed what those might be yet, but these are two plans that they're already marketing heavily. Now, the natural gas engine debuted in 2021 in China and is doing very well there. A lot of interest in the U.S. You've got major fleets that are signing on for it now, both to test it and presumably to purchase it. And then coming in 2027, they will have a hydrogen internal combustion engine, which will essentially burn hydrogen as the fuel. Again, zero carbon. And they say the 2027 engine will meet the new anticipated NOx changes from the EPA. So you could have a number of years, number of cycles of purchases where companies could use this, as they ease into electrification. The issue in the car side and the slowdown that we're seeing on electric vehicles right now, I think what we've read, although I don't think it's entirely correct, is that the early adopters have done their thing and now everybody else is kind of hanging back. Maybe that's true. We've certainly seen some price cuts on electric vehicles and that sort of thing. We've seen the automakers sort of seem to hesitate a little bit now about how fast they want to go. On the trucking side, these regulations are what's driving it. They're being driven to go to electric vehicles, zero emission vehicles. Again, mostly in California. That's going to continue. Nobody's going to step back from that, so they have to continue. That is, the fleets and the OEMs have to continue on the path to electric vehicles, whether the acceptance is today or whether it's 5 years from now. So it's not. There's a little bit of a different story there, Kaylee, I think.
To mention it because you're here, and it wouldn't feel natural if I didn't. We also had an update from Nicola that you put an amazing piece out not too long ago on FreightWaves.com.
Anthony, you and me and Nicola, what are we going to do? I got to ask, do you still have your Nicola stock, Anthony?
I set it and forget it. I still have it. It's just sitting there, and I'm still up in the triple digits because I bought so low.
You're not up where you would have been if you'd sold when I told you to. Oh, well, never mind that. Okay. So yesterday, the headline for us anyway, and not everybody went this way, but the headline for us was that the recall of the engines for the electric trucks is going to, basically from an accrual basis, is almost $62 million for Nikola. That's a big, big number for a company that doesn't have that many millions lying around. So they'll be spending that over the next 9 to 12 months to fix the trucks that are out there. They found that their investigation found that it wasn't just a coolant leak, but rather there's other issues, and so they're going to be swapping in battery packs. The one question that Nikola didn't answer, we think they have an answer, we just don't think they're giving one, is who's going to supply these battery packs? Because Romeo Power, which was the source of the original packs that have the problems, if it was still a supplier to Nikola, would probably be paying part of the bill if it was still a supplier. However, it's part of Nikola was, so therefore Nikola's on the hook for the entire cost of the recall. So there's that. They did not sell any vehicles during the third quarter. They bought back 7 of them, and they delivered 3. So these are numbers that we used to see with, Workhorse used to talk about these kind of numbers, and people would say, wait a minute, that's not possible. Well, actually, Nikola had negative revenue in the quarter, about $1.7 million, I think, in negative net revenue because of these buybacks and that sort of thing. I think this story is still, just sort of out there. It's not terribly promising. It feels like Nikola is really counting on incentive money in California for hydrogen trucks and partnerships, which they do have, to get a fueling infrastructure built out. Right now, it's just going to be mobile fueling. I think they're betting a lot on California, carrying their weight until they can get some other states involved. It doesn't look real promising there, but it's continuing.
Awesome. Well, Alan, thanks so much for keeping us updated on all the latest, and I'm sure we'll see you here in Chattanooga soon.
Yes, next week, sir. See you then.
Right now, we're going to toss things over to Kaylee for our next look at today's weather.